All right, so can you hear me? Uh, I just did this exercise that it was inspired from Tom Hugard's Best Loser Wins, but I think it was inspired to him by some psychology. Basically, the exercise is you write a question down on a piece of paper. This was my question. What do I need to do better for my day trading? And you just write down the question and you just start writing the first things that come to your mind. Um, you start writing down the first things that come to your mind. That's it. It's super simple. And basically, the reason I do this is because I believe that I have the answers inside me. They're not external. I know what I have to do somewhere inside. And maybe it's my subconscious, whatever, blah, blah, blah. That's the point of the psychology exercise, is to kind of draw those answers out. And so I'm just going to read this to you. What do I need to do better for my day trading? I just wrote the first things that come to mind. Not trade every day. Only trade when it is volatile. Listen to your instincts about what days will be bad versus good and not trade on the bad days. Some context around that. I wrote that on Wednesday or Tuesday night that I thought Wednesday through Friday wouldn't be that good days for trading. I thought that because there wasn't any big market moving events and because we have the interest rate decision next Wednesday and the market's always pretty quiet before that. If I just would have taken Wednesday through Friday off, I would have a lot more money right now. So don't trade the market when it is bad conditions. Yeah, I mean, just don't trade chop and don't trade when it's like low, not volatile, like it has been the last 3 days. Trade at times when you can have good expected value, particularly for pullback dips. Go in big. Buy calls at the day close. Buy TECL and SPXL, which are leveraged ETFs. Just take advantage of the times when the market should be taken advantage of. Recently, we had a big dip. 2 weeks ago, it was at its low. Pullback, came back pretty strong. That would have been a great time to buy TECL or SPXL. You'd be up 15% in 2 weeks, and it's pretty good. 15% in 2 weeks is pretty damn good. If you have a $10,000 account, that's $1,500 in 2 weeks. Okay, so don't oversize on inside days. That one's obvious. Goes back to avoiding chop. Only trade when you will be really surprised if it would fail. This is a Tom Dante inspired mental heuristic for trading, and it's exactly as it says, but I'll read it again because I think it's really important. Only trade when you will be really surprised it would fail. All right, next one. Stop trying to trade every day. I think I said that one twice. That was my first one. Well, I guess they're kind of different because the first one was don't trade every day, but like a command, but this one was stop trying to trade every day because even on days where I don't suspect it will be good, I log on and I see what the market does, I try to trade, and how's that gone for me, right? I think a good solution. Sorry, I'm a little sick. I gotta blow my nose. Sorry, I'm sniffling right into the mic. That's kind of gross, but I'm sorry. So I think what I'll do, because I have these instincts about what days are bad versus good, and it's still, I think, worth it to log in and check. But if the market's in the middle of the range, if it's in an awkward place, don't trade. Like, trade it if there's a gap in your favor. 100% do that. But if there's not a gap in your favor, probably best to just not trade. But it depends on the market. I mean, I want to trade based on the higher time frame and on the 1 hour, using entries on the 5 minute. So that's what I want to do. And maybe I'll switch to the 15 minute. Who knows? Maybe I'll try that. What the hell? We'll see. Stop comparing yourself to others or even yourself. Stop seeking stimulation from trading, aka stop seeking dopamine. Only trade when 5 minute ATR is high. So this goes back to that volatility point. If it's chopped and made wicks off the open, don't trade it. And then the last one is just don't fuck with chop. Like, truly, just don't. Okay. Summarizing all that, what are my thoughts? Volatility. Trade when it's volatile. When it's not volatile, when it's choppy, don't trade. So just trade the right conditions. Stop trying to trade if it's not good conditions. Please. If I ever do succeed at trading long term, like truly make it big, I bet the future version of myself will look back at what I'm saying in this video and say, he knew what to do. He said the right things. He just wasn't actually doing them. So hopefully I'll actually be able to do them now. So that's the big thing is don't trade every day. Just because you're a day trader does not mean you're supposed to trade every day. You're not supposed to. And only focus, all right? Only focus on the volatile times. And I have some instincts for that. You can rely on instincts, but it's like instincts based off objective data points. Like, oh, we have interest rate coming up next week. There's not any market moving events happening right now. It's moved a lot, blah, blah, blah. And yeah, you can still check the market open, but it doesn't mean trade. It doesn't mean trade. And if you watch the first 4 or 5 bars and it chops and there's wicks, there's a wick on top and a wick on the second bar, there's a wick on top, and on the 3rd or 4th bar, there's wicks on the bottom, probably means it's a range. Just say, hey, not a day to trade. It's not volatile. It's choppy. It's not a good day to trade. And if I sit there and keep watching, it means I'm trying to get dopamine. It means I won't ever be successful at trading. So trade in the volatile times. Avoid the choppy, crappy times. Summarized all these points. Like, that's the main one. That's really it. What do I need to do better for my day trading? Trust myself a little bit more about my instincts and just don't trade the bad days. And I know that sounds extremely simple. And it's in practice, it's way, way, way more complex. But I wanted to make this video journal for myself. Maybe it will help some other people. That would be great. I would love that. But I think this is what I need to do. Is I just need to try and trade less. Trade less days. Don't watch the market as much. There are times when you want to trade and risk money, and there are times when you want to protect your capital and not trade and not risk money. And you can tell pretty quickly if you prepare correctly what those times are, what those times are not. If you're objective about the 5 minute ATR, how wicky is it? How choppy is it? Are we inside yesterday's range? Are we inside yesterday's chop? Or are we near the close? Are we near the close of the prior day high? And is there momentum up? Is it going to gap up? Blah, blah. Or is it going to make an ATR move and go up? what did the previous days do? Did the previous days shoot up a lot, or have the previous days consolidated? And have they been small days? Because after 1 or 2 consolidation days, those are the days we get outside day nice movements from. But if we have a big movement, if we have a big candlestick on the daily bar for the prior day, well, it makes it less likely that the day after will be a big move. So, of course, there's exceptions, like after CPI, there will probably still be some volatility. But, yeah, that's it. That's my rant, my introspective exercise. I hope this was helpful. I think it helped me. Long way to go. But I've proven to myself I can be successful, and now I just have to keep at it. So thanks for watching, and I'll see you at the next video. Peace.